Welcome back to TokenStandard Live. J Snook here. I am going to dive right in. We have a phenomenal show packed with probably more stats and more data and more things to make you go than any episode we'll do this year. Oz Sultan is our guest. He's a 20-year veteran in tech and marketing. He is a recurring guest on shows like Varney and Friends and Fox Business. We're pleasure to have him here. He's spent the last 15 or 20 years deep inside of things from cybersecurity to Muslim affairs, working with brands from Nintendo and The Economist to other Fortune 100 companies. He is the founder of the Digital Anti-ISIS Framework, which we'll probably get into a little bit later. But welcome to the show, Oz Sultan from New York City.
How are you doing?
Oh, doing great, man. So we're going to talk about a lot of stuff today. Covering everything that's happening with Google and the recent thing and the Chinese search engine stuff, the New York CISO law. We're going to touch on regulatory and GDPR, national security stuff, NAFTA replacement. We'll dovetail into what's going on in the crypto markets and blockchain and enterprise. But before we do that, I want to contextualize for you, the audience that we seek to serve here at TokenStandard and TokenStandard Live are C-level executives that are trying to understand through the lens of what we call then, now, and next, whether they're early on time or late, making critical decisions to their business as it relates to navigating, the coming year and the coming 5 years successfully. And then the second layer of that audience is the smart money, fund managers, people that are moving capital flows from one asset class to the other, trying to understand in both calm and now more volatile markets which end is up and what kind of macro forces might be at work to change the trajectory of their investment decisions. So I think that it's apropos and the timing is really great to lay out a lot of the things that you're seeing through your lens, both from the policy side as well as the macroeconomic side and the technology side. And we're going to start off with an article that went live today that you wrote on thehill.com, talking about the previous several weeks back, Marriott got hacked and over 500 million user accounts were put at risk. And some of the things that were interesting there, and I'll let you kind of lead in however you want as it relates to cybersecurity as this macro trend that is going to only continue to become more prominent as enterprises move forward. But I was kind of blown away that apparently in 2017, 1,579 undisclosed security breaches occurred in the United States as it relates to that, and that the average cost of these is roughly $3.62 million to the enterprise. 75% of those were from outside the organization. Obviously, as an SPG rewards member myself and a happy one, I don't like that, I might be now on the dark web. So what does this all mean, and what do we do about this?
Well, let's kind of start with the personal aspect of this, because I was literally sitting in like a Fox green room the other day talking about the whole, Starwood/Marriott hack. 327 million of those accounts that were hacked have their passports as well as potentially their driver license information and in certain cases maybe even social security information that was breached and disclosed. So in the context of where this was in like the 00s, this would be bad. This would be something where they would get a regulatory smack on the hand. But there would be a cost that would be, there's a perception cost, obviously, to membership. There's a lot of people who might be like pulling their memberships and going to Hilton. But outside of that, in the 00s, that wasn't very significant. Talking today, sitting here today in 2018, we've got a number of huge challenges to deal with. For one, Marriott might be looking at billions of dollars fines from the GDPR law that was passed earlier this year. And so that's the General Data Protection Law that encompasses all of the European Union. What that basically says is that users have the right to have their personal information removed from specific databases that you as a company might have, and at the same point, they have a right to privacy, right? And so that has major cascading effects on not just your bottom line, but what you should be looking at in terms of a CEO or a CIO or even a CFO, and as to what your corporate spend is from a IT perspective and cybersecurity perspective. Because like right now, most companies spend about 2% of their annual budget on IT. And IT is always viewed as a cost center. And I'm saying that moving into the 2020s, what we really need to be looking at IT as is a profit-bearing center that we need to work with hand in hand that can allow us to continue to maintain profitability inside of companies while at the same time managing the security not just of our general operations, but our customers, right? Because at the end of the day, Marriott's going to be looking at a couple $1 billion in fines here. We don't know what that effect's going to have, but I can tell you that their shareholders are not going to be happy with that.
Yes, you hit on a couple of things there that I think are top of mind for some folks, and then also maybe not. GDPR obviously is a primarily European Union thing. It'll impact any global company or any company where there is significant traction or user base from inside the European Union. Obviously, Marriott and SPG, we don't know how many, or maybe you do, but out of those 327 million accounts, we don't know how many of those were based in the EU, but any number of those would cause a significant breach of GDPR. California's passed some legislation, but as of right now, the U.S. does not really have a roadmap that has been published, to my knowledge, for a similar policy. But even without that, there's going to be a hit. I think the other lens to look at it through is, are we numb to this, right, Oz? I mean, if we think about the user, I'm sure you're probably an SPG member. I don't know too many business guys that don't have an SPG rewards number, whether they're a frequent user or not. And so, me being one, like when Equifax happened, I never considered myself a customer, right? I know I'm their product. And yet now all of a sudden I have to worry about, whether I put freezes on my credit report. And there's a whole bunch of friction and minutia that you have to deal with there. And the level of apathy that even I think thinking people have, at what point from a true risk standpoint, and whether we're looking at it from a market risk, from an enterprise risk, or just from a societal risk, at what point are end user apathies, which I'm even guilty of myself, when these things happen, almost making these things less consequential or more consequential than they are? Because like I haven't done anything yet, right? Marriott got hacked. I haven't done anything. I haven't called Marriott. I haven't asked them, should I probably? They took a hit in the stock price. They bounced back. It's kind of like, what are the real implications here that we're not thinking of, or that we need to be talking more about as an enterprise, that go beyond, the short-term hit and maybe look at more fundamental shifts in the way that we have to do business and the way that we justify doing business?
Well, talking about the now next. So the previous problem was that America from the 60s to 70s was hyper vigilant about security, and is the government spying on us and that sort of thing. We've moved into this bizarre scenario of Big Brother being social media companies and advertising companies that have access to fundamentally private stores of data that we would think that they should have access to, but yet they do, to run all sorts of targeting. I mean, one of the things I mentioned in Barney the other day is that Google is still tracking you in incognito mode and tracking what you're looking at so that they can serve ads to you, right? And so right now, outside of maybe using DuckDuckGo for search and a handful of Mozilla or a handful of privacy-focused browsers, or even having your own sort of Linux distribution running with a privacy-focused browser, you open yourself up to a tremendous amount of scraping, scanning, and cookies, and data collection from companies, and thus becomes sort of the norm. The other problem we have, kind of, and it's endemic on the consumer side, is that everyone is willing to give up a tremendous amount of privacy for convenience, right? So if you're trying to date, and you want to use, Humble or Match or half of these applications, you can use your Facebook single sign-on, which is OAuth, which used to be like the big single sign-on method that people and everyone else was using, kind of fallen by the wayside. So everyone's like, oh, I just have to click, I have to authorize Facebook, I have to fill out any forms. But what you don't realize by doing that is passing, a significant amount of data to them. But in most cases, they have access to your friends lists. They may have access to all of your photos, and they have access to your direct contact information. And then they themselves start profiling inside of those apps. And then what most people I think are not aware of is that the apps are sharing information with other apps. And so you're going to see this with Facebook lawsuit that's coming out of Europe right now. The UK published a bunch of internal Facebook emails between Zuck and Sheryl Sandberg and a bunch of executives over there. What they were doing was they were using Facebook single sign-on to track not just what apps were being used by who and when, but what apps they should look at find and what apps were adversarial to the business process, right? And so if you think about this from where this is going, from a competitive landscape perspective, mass data collection, data exhaust, and just data, big data in general, is really where companies are starting to go. Transformative nature of figuring out like how do we compete, right? And,
We're getting a little bit of a mic issue. I don't know if you can lean in a little bit more, but you're breaking up a little bit there. So yeah, that's better, much better.
I was at a dinner with Ben Goetzel, who's running Singularity Net the other night. And, where we're going from here is you're going to take all this big data that we have, and then we're going to start looking at, AI technology that's being deployed. Like right now it's AGI. It's, artificial general intelligence. Like we're trying to find things out like, what color hat does Chris Snook wear? And what days does Chris Snook wear his hat, right? But where we're going with this, and this is significant, is Facebook had started rolling out bots, I'd say probably about 3 or 4 years ago. And these are things that you can go to chat. You can be like, hey, bot, is a ticket for Rolling Stones available on X date, when they're touring in New York City? You can be like, yes. And you're like, oh, I'd love to buy that. And then you can go and talk to an American Express bot, and the American Express bot would get you like better seats and that sort of thing. Where we're moving is from this concept of bots to agents, right? And so artificial intelligence is going to, and this is in between AI and the blockchain, is going to facilitate the creation of these agents so that you can have like 100 of them operating for you. So you can like pick up your phone, grab your phone and talk to an agent and say, hey, what's the weather today? Oh, I don't have an umbrella. Could you connect to the bodega downstairs and, have an umbrella paid for me that pulls out of some general account that the agent has access to? So on your way to work, you just like literally fill in and pick something up. So everything from like contactless payments to information gathering to having your own personal concierge is going to be afforded to every consumer out there easily inside of the next 18 to 22 months. What the opposite side of this is that businesses are going to need to collect tremendous amounts of personalized information about you in terms of what you do. And that kind of dovetails to the Toyota article I shared with you. So Toyota is one of these companies that's now profiling data information on you based upon how you use the movies, right? So they had an advertisement for one of their newer vehicles. Interestingly, they made 83 versions of the same ad that have, so there's the heads inside of this ad are actors with emojis, and they have different emojis targeting how people feel about the vehicle, how people might react to different emojis. And these are all being specifically geo-targeted or just served to specific users based upon their utilization of. So we're moving into like this really weird arena where in America it's big targeting for us, right? And go overseas to China, China's done full language before. They've rolled out data systems now that track everything you do down to date of how you walk, right? And they've put technology in place that allows them to run facial recognition by, if you have 60,000 people in the arena, they're running facial rec on all of these people, and then they'll arrest people just because the facial rec works. They're also able to say that, they have a social profile on you, and you do something that's against the career, or against the Communist Party, they can block you from travel, they can block your kids from going to specific areas.
So let's segue that then. So we're talking about regulation and things that might be coming and their impacts on sectors within the market. So you've mentioned auto, we've talked about hospitality. We've jumped over to big tech, Facebook and Google. What are you're pretty tied in with what's happening on the Hill. This is the time of year where a lot of policies and legislation gets slammed down everyone's throat while everyone's in Christmas mode. Outside of some of the obvious ones that are related to, the recent farm bill and these things that are unrelated necessarily, the border issue, all this stuff. They're not that they're unimportant, but they're the bigger ones. As it relates to some of the things we're talking about here, cybersecurity, which I guess you could argue border control and things like that play into. What legislation is, getting put in front of Congress that is related to how companies are going to have to deal with data? What are some of the things that maybe we're not aware of that are being thought of? We've seen the SEC crack down recently on a lot of the crypto related stuff and the ICO related world, but as it relates to some of this more enterprise level big data cybersecurity stuff, what's out there, what's being done either at a state or federal level that we're not aware of that could impact how companies have to plan and prepare for this either at a cost level or as an opportunity?
Well, near term, at New York State's CISO law and new cybersecurity laws. And what's interesting about this is when these are being discussed, I've been to a number of panels. These are the first laws that I've seen that, when you come and look at the panel, it's usually a bunch of tech folks or cyber folks. These are the first panels I've seen that are all attorneys, right? And the attorneys are specifically saying that these are laws that you don't necessarily have to comply with, that you may have to defend against, because you're not sure if as a company that you're going to comply with everything. So, in step one, install a CISO or hire a CISO, or get a part-time CISO. That's cheaper to make. Step two, perform the yearly audit. But step three, be cognizant of the fact that you're going to have to be in compliance with a higher degree of information security requirements. The problem is that they're not fully comprehensive. It only affects 3,000 some companies that are involved in financial services, specifically in New York, right?
Right. So there's basically, to summarize that, there's 3,000 fin services companies in New York that now technically have to. You made a key thing there. They can choose to comply or not. They can essentially ignore it, but they have to be prepared to defend against.
If they ignore, there's fines.
Right, but so they have to be able to defend against it at a minimum, and so their hedge or their risk, is whether they prevent it from being an issue and burden the cost there, or whether they wait to get caught and then pay the fine. And so if something of that nature scales beyond New York, or even if it doesn't, the financial services sector has another potential, kind of clawback mechanism on it that could relate to, changing the dynamics of their financial health for actions that get deemed, later to be, inappropriate. And so that sector could be, there's new legislation now in New York that says if you don't have a CISO and you don't do these things, then we can fine you up to X amount. And that's going to put, financial pressure on the fin services and financial institution companies. As it relates to companies operating globally like Marriott, we already know GDPR can fine up to 4% of revenue for incidences related to not being able to provide compliance around data and privacy for European Union customers. So that can become a significant cost burden or fine scenario. What industries right now are safe, or what industries right now inside of this, are bullish, if any? Or are we heading into, a obvious overdue recession and across the board?
We're headed. It's challenging. I mean, if the Fed doesn't raise rates this week, it might be a trigger for some stagflation. But I think the bigger things that we have to look at is what happened with trade in the last week and what could potentially come, as you say, out of the hill before the end of the year. So the first thing is that we've passed the new NAFTA or NAFTA 2.0, or there's like a lot of different nomenclature about it. And the big takeaway from that is that we've gone from, and then the bigger impact is automotive and related automotive industry. So we've gone from having to have 62% of American made and or assembled components inside of these vehicles to 75%. And so
62 to 75, 62 to 75.
Yeah, and so where this big impact is, it's multifold. I don't think they talked about raising the rates of what people are paying Mexicans. I don't think that's going to happen across the board. I mean, I think they're going to get Mexicans making $4 an hour now to $16 an hour, but there will be an uptick. But what the longer term impacts are, if you look at these pieces of legislation independently, there's no roadmap. If you look at the fact that the NAFTA 2.0 is pushing into automotive, and then you look at the fact with the China trade pact that they're moving towards, is they're talking about 0% tariffs in automotive. What the direct recourse of that is that China, as well as companies that build in China, and so this affects the Japanese, this also affects a lot of Europeans, because the Europeans are manufacturing vehicles there and shipping globally as well. Some of that manufacturing, some of those jobs, some of that assembly, and some of that supply chain is going to have to be relocated to the United States. So from those two pieces of legislation, what we could ostensibly be looking at, if we work in automotive or the automotive related supply chain, there's a huge opportunity for these jobs and the competitiveness of initial companies to come into the United States within the next 24 to 36 months. Trade is going to be a big issue, a big hot button. I'll say the two other things that are going to be affected by that are soybeans, as well as American farming production. There's supposed to be a uptick in terms of what we're able to sell and the tariff levels we're able to sell that at. Pork products are going to be another one that are affected. And I think this is a big opportunity for us, because China is a huge pork consuming country, right? We're talking about 1 billion people over there. And then
there's some real. I mean, there's so many pieces to this China equation that it's almost, I don't want to say it's impossible to unpack, but when you really start to unpack it, there's several different scenarios that are playing out, and I think that's why we're seeing Dow's up 400 today on rumors that the China trade deal is getting closer, and yesterday or last week it was off 500, and so essentially we've given back all the gains of 2018 over the last several weeks, but this trading range of 400 to 500 in these swings seems to be indicative of the fact that smart money and even policymakers that don't really understand where this is all going. I mean, we've had the Apple and Qualcomm thing, which I know you speak a little bit about, recently just happened. We've got 2 days ago or yesterday, whenever it was, Google was on the Hill talking about what they're doing and this private search for China contract, and whether it's being developed or whether it's not, and there was some vulgarity there with that testimony, and and then you have obviously the Trump trade talks and the tariff talks and the all of this going on. It seems to be, and I don't know if you agree with this or not, maybe you can illuminate it. It seems that you've really got to get instead of macro, you almost have to get fundamental with certain trades at this point, if you are looking at it from a value standpoint, and just kind of bite down on the things that fundamentally look strong. And we'll transition to where blockchain and cryptos are in a second here. But
so on the macro level, what you have to look at is national security. Okay, And so from the national security perspective, outside of just this portion of trade, we probably have 2 to 3 more pieces of this to negotiate, because uh, as a philosophical praxis, right, from Nixon forward, no one has really challenged the status quo of the Chinese Communist Party and their proliferation of their ideology. Trump is challenging that. He's saying, listen, for the past 20, 30 years, you've taken billions of dollars of our IP. You have reused that inside of technological products that you've resold to us. We've had this trade imbalance. We're now going to try and balance it across some of the bigger issues, right? Which is food and automotive and those types of things. But when China is threatening to ram our ships, and I think this is it's like almost like an 1800s type tactic, because they're not saying they're going to fire on us, but they're going to cause us significant amounts of cost. Because if you had a Chinese destroyer running into an American destroyer, I mean, we're talking millions of dollars per pair. And so you've got this interesting brinksmanship going on with the Chinese inside of the South China Seas. And you've still got the Taiwan issue that is on the table, which I think Trump can use as no pun intended, the Trump card on a number of things here. And you've got the national security pieces of China and Korea, China and North Korea, and a variety of other countries like Iran still being risks from a cybersecurity perspective. I mean, I think Trump has a long way in terms of what can be done with these negotiations, but I think if we can get pieces in place, we're going to see a lot more security in the markets. We're going to see less volatility in the NASDAQ and the NYSE, and we're going to see a little bit more, comfort from companies not just here but abroad. We really haven't had a trade war, since probably after World War II, and that was over wine and a variety of European resources. And most people who don't study the history couldn't remember it.
Yeah. And I think, it's interesting that you start with the macro and the philosophical thing, and we don't have time to dive deep on it related to this conversation, but it is notable that when you think about ideology, we're not just talking about capitalistic versus communistic or things like that. We're also looking at historical patterns and belief sets. And, there's been way out there on the tinfoil hat side, but interestingly enough to take note of, there has been data, and I saw Stephen in the chat here talking about it, which was interesting that he brought it up, that, the grand solar minimum, which is this time period where the Earth is in an orbit that is furthest away from the sun. It happens every 400 years, and it lasts about 40 years. And it changes weather patterns. And we're not talking about, climate change or global warming or things like that. We're talking about just where we are in relationship to the sun and the distance. And so Chinese dynasties, interestingly enough, when graphed out for the last 4,000 years, every major Chinese dynasty that ever fell, any regime change, actually fell during a grand solar minimum. And, there's not been a lot of public talk about that, certainly in any of the mainstream stuff, but it would be interesting to note or it'd be pretty easy to plausibly connect the dots and think that at some level, their ideas around what they need to do to become off of a U.S. dollar, dependent with what they're doing with Iran and Russia and things like that, to balance out their gold holdings with the treasury holdings and all these different things that are impacting their decision sets. That there's a lot of thought around the fact that over the next 40 years they're in a period where they're vulnerable, because should we see temperatures drop on average 8 to 10% like they have in the past, half of their country's crops will be wiped out due to frost, and that creates famine and other things that, when you have 1.7 billion people, become really issues of national security on your own side. And so I think this is a macro issue that, without getting way out there in left field, obviously starts at an ideological level, but then there's the pragmatic level of what does it mean to markets today, and how do they navigate? How do we think, this push of the Fed, again, if they signal that they're going to raise rates and then they don't, then they signal that there's an issue with the economy that they've said there wasn't. And so, like you said, maybe we get stagflation, something bad happens there. So we'll see what happens over the next week. Trump's obviously saying he wants them to not raise rates. But if they don't, then they kind of they fly in the face of what they've indicated is a healthy economy. And so, in the short run,
side of this, we kept rates artificially low during the Obama administration, and we continued to print money to inject artificial liquidity into this. And this is, where the blockchain folks kind of come in, and a lot of our industry, and then they're like, whoa, 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 you can't continue to do this. The dollar is still strong for a variety of reasons, and as much as the Chinese like to partner up with the Russians and say, oh, we're going to move into, the ruble or a portion of holding currency. Every time they do this, we see some sort of market reset of multiple currencies on a global level that still, don't affect the dollar. The pound has been affected negatively by Brexit, but the European, the euro rather, has been affected, and a lot of the Eastern European currencies have been affected by this whole gas issue that's going on with Russia, because most of Europe is now beholden to Russian gas. If they turn Russian gas off, or they were to invade further into Ukraine, and there's a couple of the stations there that have significant strategic perspectives in terms of what the gas situation is in Europe. You can see frozen Europeans this winter. So there's a lot of there's a lot of interesting geopolitics that are going on right now that are reminiscent of what we were dealing with in the Cold War, right? And I think this is important when we're considering kind of what the corporate perspectives are of this, looking forward 24 or 30 months. We have a Bay of Pigs. If folks don't remember the history of this, in '62, John F. Kennedy had an issue with the Russians putting nuclear bombers and potential nuclear sites in Cuba. We're dealing with that same issue now in Venezuela, with Russia moving long-range bombers to Venezuela. There's a lot of chess that's going on at a global level that has the impact that can have major impacts on oil and oil futures, that can have Venezuela as a major oil producer. We have impacts to geopolitical stability. You see some sort of shaping status quo like that. We're seeing the Dow bounce about 400 points, 300 points. And then we have what you and I had talked about offline before. There's a lot of economists that have been predicting a depression, right? So what they're talking about is there's some sort of crash coming. We all know there's some sort of crash coming. And I talked about this in the Bad Crypto podcast, and I'll kind of like echo it here. Blockchain, for example. So what are we seeing in the past? And this kind of couples with what's going on with the NASDAQ. We saw a sell-off of crypto, and we saw a collapse in the altcoins that has led to Bitcoin moving to around the 3,500 range. In Ethereum, people were making memes about $200 Ethereum. Ethereum's at $100, right? Maybe a little less. I would check it today.
In the 80, it's somewhere in the 80, sub 100 range, yeah.
Right. So these factors are leading towards a perspective that basically says the market, our market, is resetting around almost the same thing that happened in '98 with startups. A lot of the startups got washed out simply because the market dynamics changed, and they were doing dumb things. Like, my dumb joke is that in '97, '98, there were people who were like, "I'm selling pants." Wasn't anything exciting more than like the pants were available on the internet. And now we have people that are doing idiotic things like pants and blockchain.
I've got pants coined, right?
And it's like, oh great, I can track your pants. That's very useful. It's not, and there's a lot of ideas out there that kind of sounded great in theory, but when you implement them, they're not there. But the proof in the pudding for our industry, blockchain, at least inside of the next 3 to 6 months, is going to be based upon gaps. What you had is even the founder of Ethereum talking about the fact that if they can't get dApps, if they cannot get applications that people are using on these platforms, if they can't get user traction, there's no purpose for some of these. And in a lot of cases, what we're looking at is the uptick in utilization of altcoins and baseline cryptocurrencies very much echoes what we were dealing with the financial markets in the 1980s. An example I like to talk about is the Israeli shekel, right? So the Israeli shekel, until we stabilized it in the 80s, would be something like everyone in Israel used to go and buy bread in the morning. The reason they buy bread in the morning is because by lunchtime, the price of that bread had gone up like 400% because the shekel had devalued. We stepped in, we stabilized that. The same thing happened to the French in the early 1990s because you have these things called PRM bans. And so what most people aren't aware of is that every single one of the large countries, less us, more the European countries, Asian countries, that's ASEAN, and then Latin American countries have tremendous amounts of debt. So what they have to do is they have to cover a ton of different interest payments that come due on a daily and weekly basis. So they borrow money from other central banks in order to do this, and they pay that back. And oftentimes they get hit with exorbitant interest rates in the short term of this. It's like loan shark. It's like countries.
Well, and also because of the current setup, I mean, we're the only country that can pay back our debt in the dollars that it's denominated in. Everyone else is paying back that debt against essentially a U.S. dollar reserve, and so these currency debasements or things that happen are even more impactful. The interest rate is compounded at an even bigger level for these emerging markets, which has been the case for the last 60, 70 years.
Right, but that goes back to the blockchain argument. Why is it that the IMF and some of these large international banks are still in 2018 are still lending to emerging market countries at rates that you could go down the street and get from some mafia guy, or like
right.
We're talking.
Well, we can say why, but we because there's money to be made off of that model. Unfortunately, let's stay with this thought though, because we got to wrap up this session. But we're hitting on something that I think is again just useful from a where do I look, where do I go next? We've been talking a lot about data. We've been talking about security. We've talked about some of these macro trade war issues, and now we're dovetailing into the buzzword of last year and everyone's favorite beating dog right now, which is blockchain and Bitcoin. We're not going to talk about the change in Bitcoin or Ethereum prices or that, because we're not going to debate that at this point. Obviously, it's way down off of where it was, and it's been super volatile this last several weeks. I think what's interesting and more pragmatic though is that just like every market, just like when the .com crash happened and there was the Amazons or the PayPals or the companies that kind of had enough reserves and had enough traction in the way of user growth and real value in the market, solving a real problem, they were able to ride out those storms of winter and then ultimately become the companies that they are today, which are in Amazon's case one of our most valuable companies, and certainly now the richest man in the world, and Bezos. What's interesting is a company that most people haven't heard of or haven't followed, Factum, does data security and audit, blockchain as a service. And they've been very quietly over the last year, in the last several months, signing enterprise grade contracts. Spherion came on and committed to do the first 1 million transactions back in September. They've added several more like that over the last couple of months. And if you look at the 30-day chart, and I just think it's interesting because when you think of crypto right now, everyone's running for the hills and thinking, oh my God, there's nothing left here. And if you look at the 30-day chart here, Factum in November, was at $4.88, and as of today is trading at $9.56 and is up almost 116%. Over a 30-day period. And I'm not using this as a plug for the token or the coin or any of that. This isn't a financial advice show. It's just a use case to say, in every market that is crashing hard, when there are fundamental strengths of traction and revenue and real value being created with the service or the product being provided, there's value opportunities that often go unseen. And so I think the challenge that every investor has right now and the challenge that every enterprise has right now is just focusing on the core business of what is going to ultimately secure our enterprise, what is going to drive value to our enterprise on a fundamental basis, where are we facing headwinds as it relates to costs and new risks because of legislation or class action suits that may occur, and and do we have enough dry powder to ride out whatever winter may come? Thoughts on that as we close up, and thanks for all your time and energy and insights today.
So I would say from the blockchain space, Singularity Net, Factum that you're talking about, Stellar is another one to look at, because Stellar is now becoming the stablecoin behind IBM for all of their blockchain transactions. I would say we're going from proof of work and proof of stake, things like proof of supply chain. So you've got new blockchain paradigms that companies can invest in. Enterprise blockchain is coming to the mainstream now, so CIOs need to start getting educated on that, because that type of technology is coming mainstream, and it has the opportunity to affect your bottom line and fix holes in your supply chain. The trade deals are coming,
and there's grants now, correct? I mean, to kind of talk about that from what's coming out from the U.S. government as one example. Yep. There's now, I believe, there's Homeland Security grants for anti-forgery.
$800,000 grants for anti-forgery technology, and so I think that's just the tipping point, because there's blockchain advisors that are talking to the White House. They're trying to figure out what makes sense. The SEC, as we saw, came out and it had a couple of edicts on Airfox. There's one other company I'm drawing a blank on right now, but they had to do some resets on their ICOs, and I think the SEC is going to come out one more time. Going into next year, I think you can expect that there's going to be a fair amount of ICOs that cross lines, people that cross broker-dealer type lines that they're going to be prosecuting. And I think we're going to start moving towards institutional blockchain investments, as well as institutional crypto investments in Q2 of next year. The ETFs, the stuff the Winklevoss brothers have been pushing, those have all been put on hold right now, and there's a technology assay that has to be done by the government. And I don't see that happening, well into March. So I think the big movement in crypto, the big movement in blockchain is going to be Q2 next year. In fintech, we should be looking at that probably about the March-April timeframe to get started with things. Spend Q1 kind of planning how to get into this stuff. If you're looking at blockchain technology in terms of fixing supply chains, or fixing audit processes, or eliminating redundancies inside of your institution, or just reducing costs overall, because that's what it's great for. Start making those analyses now, because the enterprise solutions are there. And then to the Marriott piece, there's opportunities to leverage blockchain databases. There's opportunities to be using new cryptographic solutions on databases that you have right now. Those are things that you should be undertaking. And I'll wrap up by saying that you can start with looking at hiring a CISO, but what a lot of companies should really be focusing on in 2019 is some sort of rudimentary audits to really understand where they are from a security perspective, a cybersecurity kind of outlook where you do some sort of executive offsite and get all of your C-suite sort of on the same page. And then blockchain education. These are the types of things that you and I do for corporations, but this is also the type of stuff where they should be looking to have some thought leader internally that could really kind of guide them. And then lastly, I'll say legal. The Apple Qualcomm thing played out pretty nastily here over the past 2 years. But Qualcomm appealing to the Chinese granting an injunction in Apple phones, and Apple saying no, this is not playing out inside of the media as the one last thing. As a corporation, what you should be looking at is, and I hate to say this, but it's optics.
Say that you should be looking at what?
And I hate to say this, it's optics, right?
Optics, right?
Because a lot of what is now being looked at, and we started off with this, is that even though there's privacy violations, it's really the optics of what you're doing as a company to remediate these types of things and to solve these problems long term. And if there's a loss of confidence in you or your product, well, there's going to be a loss in your stock.
Yeah. I think that corporate communications across the middle market and obviously up into enterprise Fortune 100 is going to be very busy over the next couple years and beyond, because it will be just a bloodbath of optic opportunities to try and navigate, and and at the end of the day, optics aren't enough, right? There's got to be real action taken behind it. So you've given a lot of things for people to think about. We're going to put a lot of the links related to everything that Oz was talking about, from the Google Chinese staying to New York CISO law. We'll put these in the show notes on the YouTube channel for the replay, so you'll be able to link to these direct sources. Thanks for joining us, Oz, and have a great rest of your day, and happy holidays to you.
Happy holidays, Merry Christmas.
All right, and guys, we're going to finish off this show with a quick promotion for next week's guest. We will be going deep with Mickey McManus on everything from how these technology advancements and how everything from social media has strip mined us of our cognition, malicious denial of service attacks against our thinking, and what we can do about it to not only lead our enterprise, but also understand the world that we now live in, that is surrounded by trillions of connected devices that now are a living, breathing, dynamic thing of computational power that we don't just have access to, but that we actually live inside of. And you do not want to miss next week's discussion before the holidays with Mickey McManus. Thanks for tuning in. And without further ado, we are out.